The Dow Jones Industrial Average just crossed 13,000 for the first time since May of 2008. It's eased off a bit since then, down 15 points. Interesting here. I'm Jill Schlesinger at CBS MoneyWatch, and I'm joined by Jack Otter. We're going to talk about what does this really mean.
We have to get it out of the way first. Of course, it actually means nothing. Absolutely nothing. It is a psychological barrier. Humans say, oh, 13,000 round number, and as you point out, we've already crossed below it. Traders really don't care. That said, I think it suggests two things. One, it reflects optimism out there. The fact that the market has been going north instead of south, I think, suggests better numbers in the economy and a lot of signs that things are improving. And of course, it suggests that the market expects companies to continue to be profitable.
I think it also says bad things didn't happen, because back in October we were at 52-week lows, 10,400 in the Dow. What was happening? We were scared about Greece. We were then scared about Italy and Spain. Could the Eurozone really contain this crisis? Would it spill over into the U.S.? Would it cause a global recession? Well, now, today, we find out Greece got this second bailout of $172 billion. It does look like the crisis is contained, and maybe the absence of that really bad news has helped stocks move up, and certainly ahead of our own expectations. I think the big question most investors have is, hey, if stocks are up over 20% since October and we're at 13,000, Jack, why don't I feel better?
Well, part of the reason is because the stock market is forward-looking. So it doesn't tell you how you feel today. It tells you how the market participants think you're going to feel 6 months from now. So Obama is very happy about 13,000 today. But of course, so many things could go wrong. I mean, we haven't talked about Iran. Who knows what, do Israeli jets drop bombs on Iran? Does the Greece thing finally blow up? I mean, frankly, yeah, we had some nice developments over the weekend this morning, but really, it's kicking the can down the road. So who knows whether Greece will blow up? I like a more important milestone that we've written about on MoneyWatch, that we're actually very close to crossing the October 2007 all-time high of the market if you look at not the Dow, but the Wilshire 5000, which tracks almost all the stocks out there. To me, that's actually a more significant number because it's all stocks, including small cap, small company stocks, which have been on a huge drag, and so, or jag, not drag. But that suggests to me that really this momentum is even greater than Dow 13,000 suggests.
And I would also suggest to people, though, don't get so excited about the number and don't go piling into stocks now, because we've seen this time and time again. We reach these milestones, people open up their 401k statements, they feel good, they pile back into stocks. Remember how bad you felt back in those lows. Think back to 2008 and 2009. Keep that diversified portfolio. Don't jump on the bandwagon, and know that it is going to be a bumpy ride, right?
That's such an important point, because remember, the good news has already happened, right? The market is already up, and that does not mean, you pointed out it's already gone below 13,000. For all we know, we won't see 13,000 again for who knows how long. I think we probably will, but there's a chance we won't. So people should not use this as an excuse to jump into the market. They should use it as a reason to reevaluate their portfolio, make sure they've got their long-term plan in place.
And remember to open up those statements again. It does get a little bit easier when markets are higher. Whether we go to 14,000 next or 12,000 next or stay right here at 13,000, we'll be following the story on CBS Money Watch. Thanks for watching.